much, and it's a pleasure to be here. It's such an exciting topic. I cover emerging and frontier markets at Reuters, and green finance is something that we write about more and more these days, so I'm very pleased to be here. This panel is trying to look into green infrastructure financing in India and across the ASEAN region, and I have three knowledgeable and wonderful guests here with me. Kiyoshi Nishimura, Vasuki Shastri, and Pratik Dattani. Maybe you could just briefly introduce yourselves and let us know what your connection is to green finance.
Okay. So my name is Kiyoshi Nishimura. I'm CEO of Credit Guarantee and Investment Facility. And I'm pretty sure, but you don't know what is CGIF, our organization. Our organization is a new multilateral guarantee facility established by the 13 Asian governments, including 10 member countries of ASEAN. I pronounce ASEAN, but I notice people pronounce ASEAN here, but for Japanese English, we call ASEAN. But these 10 ASEAN countries and its plus 3 partners, China, Japan, Korea, established this guarantee facility together with Asian Development Bank to promote local currency bond markets in ASEAN countries. And we are not here to basically support infrastructure finance or even green infrastructure or green investment, but our role is to promote capital market in mainly ASEAN countries, and we believe that capital market can play a very important role in financing infrastructure investment or green investment. So from that angle that we are interested in this subject.
Vasuki.
I'm Vasuki Shastri from Standard Chartered Bank which has deep roots in Asia, Africa, and the Middle East. Was established in my hometown of Mumbai in 1853.
So until a couple of weeks ago, I used to be the UK director for the Federation of Indian Chambers of Commerce and Industry. And FICCI is India's oldest and largest trade association. And our role is very much to help be the voice of business in India. We have about 250,000 members. And the UK office's role has, over the last 3 years that I've been here, has been to promote India-UK trade.
Great, thank you very much. Kiyoshi, you were going to give us a brief presentation, 10-15 minutes, to talk about the work of your agency.
Yes, so I would, because we operate mainly in ASEAN countries, so I'll talk about green bond markets in ASEAN countries. Unfortunately, the ASEAN market may not be so sexy to China. Many people have left because after talking about China and India, which is pity because ASEAN is quite big economic bloc, which has a $3 trillion economy and growing about 5% constantly. So it's quite sixth largest economic bloc in the world. But unfortunately, that the aspect of a green bond market has not been really developed well. They are quite very early development stage in terms of the green bond market. And I tell you why that's the case. First of all, if you look at the ASEAN countries, what they need for green infrastructure investment, the investment need is not so huge compared to their neighbors like China and India. Like ADB recently published estimate for the infrastructure investment needs in emerging Asian countries for next 15 years. And ASEAN is one of them. And especially that this new estimate interesting because they also, not all total infrastructure investment needs, ADB estimates what's needed for green infrastructure. So additional green infrastructure. And then come up with the number for ASEAN for next 15 years, $26 billion, which is large, sounds large, but compared to China, their estimate for China is $2.1 trillion. Estimate for India is $800 billion. So compared to these big numbers, ASEAN's actually green infrastructure investment need, $26 billion, is relatively limited. Although big, it's relatively, comparatively limited. That's one thing. Second thing is if you talk about ASEAN market, main ASEAN countries, basically infrastructure investment are financed domestically through the domestic financial system, mostly banks. The ASEAN banking sector is huge, Also, they have like a $3 trillion asset and a very strong capital liquid. So they finance basically most of the infrastructure investment need in the ASEAN region. And the role of the bond market in ASEAN countries still, especially financing infrastructure investment needs, is rather limited, although there's a gradual shift from bank financing to bond market. Bond market itself, actually, ASEAN bond, local currency bond market is not so many people know, it's quite big. Already $1 trillion market and growing like every year 10 or 15% growth, so it's very big. But still, the role infrastructure is financed by banks, not bond market. And if you look at this bond market in ASEAN local currency, the one big problem is you don't see any investor base dedicated to, say, green investment, like the case in European capital market. So the lack of basically dedicated investor base for green bond is a big issue for ASEAN countries. And this lack of dedicated investor base create a problem to our issuer side, because for the issuer side, for the companies who want to issue bond, there's no much benefit for doing that, because not only the pricing benefit from issuing long green bond, which from the questionable from the beginning, but even there's no much merit for diversification of investor base, because there's no dedicated the green investors. But you have to bear additional cost to issue a green bond. So that's a big constraint. And why that constraint comes is also there's no much political support at policy level, policymakers level, or regulator level to push or develop green bond market. There's no much, really don't see any incentive schemes like China has to develop green bond market in ASEAN countries. And even before creating incentive schemes, there's no framework or guidelines at the national level. Is what is a green bond? So you cannot create a separate asset class without knowing what is a green bond at national level, which is a big drawback for ASEAN green bond market. So I'm talking about too much negative things, so I'm a little bit afraid. But so because of that, you haven't seen really much activities in the green bond area in ASEAN countries so far. Although there are some interesting cases comes up sometimes. Like 2015, there was issuance of a green bond in Thai baht bond market. And that was issued by a company called Banchak Petroleum Company. It was a little bit controversial because it is the first case oil company issue a green bond in the globally. I know there was a controversy this year by Spanish, Repsol, the green bond, but actually the first green bond issued by oil company was Thai oil company, Banchak Petroleum. So that was one unique example of green bond in ASEAN countries. And the second one is together with ADB, CGIF supported the first climate bond issued in the Philippines last year. Actually, that was the first project finance bond issued in Philippine peso, and also the first climate bond certified under the climate bond standards in Asia, and also first climate bond because that was issued by the geothermal power complex owned by one of the leading Philippine conglomerate called Aboitiz Group. And this was also the first climate bond certified under the geothermal standard of the climate bond initiative standard. So these are quite a landmark transaction. But that's really the unique case in ASEAN so far. But having said that, we are seeing quite a growing interest in ASEAN bond, to green bond, even in ASEAN market. And we see some important development this year. First of all, in Singapore, March this year, Monetary Authority of Singapore, which is a central bank of Singapore, introduced a grant scheme to promote green bonds in the Singapore bond market. Basically, what grant scheme does is to cover the cost of verification to make it a green bond up to a certain amount. So that was a very big development because there's a kind of a first sign of push to introduce a green bond in ASEAN countries. And right after that, there was a first issuance of green bond in the Singapore dollar bond market, which was issued by the company called CDL Properties. As your name show, that the property company, they issued a green bond to refinance the bank loan used for the upgrading of the building. So that was about, the size-wise, it's not so big, 100 million Singapore dollar, which is about equivalent to 70 million US dollar. But it was the first green bond issued in Singapore dollar bond market. So it's a quite landmark transaction. But unfortunately, this CDL property transaction didn't get a grant, from the Monetary Authority of Singapore. Not because it was a grant scheme was applicable only from June this year, but the bond was issued April, so it was the time lag. But even that bond was issued after June, it couldn't use a grant scheme. Simply because, from my personal point of view, that this grant scheme is too restrictive, because only eligible for the bond, green bonds, the size-wise, the minimum size for eligibility is 200 million Singapore dollars. So I said that the CDL property transaction 100 million Singapore dollars, and also the tenor should be 3 years longer. And this size restriction is a very serious issue, so actually I complained to Monetary Authority of Singapore after introduced. Because if you look at the Singapore dollar bond market, average size of bond is around 100 million Singapore dollars. So really, you don't see many bonds which can be eligible for loan. And if you look at this grant scheme, it's more meaningful to support small issuers rather than big issuers. Big issuers, this cost of the verification is not really big matter, but small issuers is a big matter. So I think it's to make it more sensible, better to loosen this criteria, but I understand that there's still that the criteria is still restrictive. But having said that, it's a very big push, the sign of the push from the policymaker. And in fact, in July this year, DBS, which is a leading bank in Singapore, issued also the green bond, which is not a Singapore dollar transaction, which was a US dollar $500 million green bond, but issued the first time by the financial institution of the Singapore. So there's a growing interest in the Singapore for green bond, which is a good sign. And there's another big development is in Malaysia. Malaysia, in last 2 months, there were issuance of first green sukuk Islamic bond in Malaysian ringgit bond market. The Malaysia, interestingly, also outside of Asia, not known, but Malaysia has the most developed bond market in ASEAN countries. Size-wise large, and also quality-wise, that in ASEAN, in Malaysia, is almost only country in the world where the infrastructure projects are financed predominantly by bond market, local bond market. So even not bank finance, their infrastructure projects are financed in the Malaysian ringgit in the long term, like a almost 25 years bond, domestically in the local currency. So very big. They are very developed bond market. And also, Malaysia is a global center of Islamic bond, sukuk. About 60% of all global sukuk is issued in Malaysia. So Malaysia, in fact, introduced 2014 the framework called Sustainable and Responsible Investment Sukuk Framework in 2014. And they set, so SRI sukuk framework, and they set certain criteria who can be eligible for this SRI sukuk, which include green, basically, sukuk, and also other SRI type bonds, like for education or health service, so on. And there is a disclosure and also verification requirement, and also the tax benefit for if you become SRI sukuk eligibility. But unfortunately, That SRI framework was introduced 2014, but we haven't really seen almost no issuance of SRI Scook until recently. There was only one small issuance for the school project in 2015, but almost this SRI Scook framework has not been used in Malaysia. But suddenly, there's a strong interest in Malaysia to issue SRI Scook. And there were two green Scook issuance in July and August, one each. Both are issued by solar power developers to finance a solar project. So this is really the first beginning of the green Scook, and we are hoping that there will be more Scook. But the Malaysia case is interesting because there's interest because now the Malaysia government is pushing a large institutional investor to allocate like 5% of their portfolio to SRI Scook. So that's create dedicated investor base for the SRI Scook, including green Scook. So I think Malaysia is a quite interesting case for the future development of green bonds in ASEAN countries. And also the regional level, I said that the basic problem is there is no framework or guideline for green bonds. But now I think the previous panel, many commentators mentioned that ASEAN Economic Forum, which is basically the body of the regulators, capital market regulators of all ASEAN countries. But they try to introduce ASEAN green bond standards by the end of this year. And this ASEAN green bond standards is in line with the global bond principles. So I think which is also another big step forward to promote green bond market in the ASEAN countries. Yeah, sorry, I speak too much. But yeah.
So your organization covers a lot of countries, and you have just listed a number of challenges that you have: underdeveloped capital markets, no guidelines across the regions, no dedicated investor base. So you have a lot of challenges on your hand. Do you see a lot of best practice exchanges? Do you see the regulators and the central banks across your countries coming together and trying to push this together? Or is this still very much a country-by-country initiative that we are seeing at this stage?
At this moment, it's actually it's country-by-country initiative. So as I said, that this ASEAN ASEAN Capital Market Forum's job to create a regional standard for green bond is very important. But even the country level, there's no much interest in creating actually the national level standards, except for maybe Indonesia or Philippines working on it, and Malaysia already has a Scook, but other countries, there's not much interest. So this regional level effort is very important to basically to push the regulators at national level to think about, based on this regional standard, to how to introduce a national level regulations.
The other issue that you mentioned is often the scale of the projects, which can be small or are financed by local loans. What can your agency do to maybe scale them up and make them more interesting for investors?
Which is a good question. The problem with the ASEAN countries, if you look at the economic bloc, it's a big $3 trillion economy and so on. But basically, it's still, although they try to create an integrated market, also the integrated financial market, in reality, it's still segregated. So if you look at each country, the scale is very small to be interesting to global investors. So I think the pooling of the asset is very important. So what we try to do at this moment is working with several project developers in ASEAN countries. They have done already the existing portfolio, and what they are thinking is how to pool the asset and create financing a vehicle to refinance those projects, which is quite, I think if you can do it, it's going to be interesting because create the scale as you mentioned.
Bazuki, this is something you mentioned that also was just mentioned here. how do you see the commitment from the governments to this green agenda across the region?
Yes, thank you very much. I want to start off by hitting 3 skeptical notes, and really forgive me for dampening some of the enthusiasm that I've seen. I think the first thing, really it's the foundation, is the green finance agenda of countries run the risk of going the way of fintech. It really runs the risk of being a fad. That a lot of people are attaching labels to green bonds, to green instruments, whereas if you actually take a deeper look, it won't stand up to much scrutiny. That's why the MAS initiative of actually helping in building capacity, in really helping both issuers as well as financial institutions in coming up with a more rigorous, tougher definition of what constitutes green bonds or green financing. That really is very good, should be embraced by others in ASEAN and South Asia as really the starting point. So you cannot have, you mentioned the example of the petroleum company issuing green bonds. It may well be for very, very valid reasons of supporting an initiative, a green initiative within the corporations. But I think once we let the definition get a little bit loose, then what we're trying to achieve here, which really is dramatically put, trying to save the planet, that objective is going to get diluted. The second skepticism I have is just reading and feeling dizzy about these trillions of dollars, which is the alleged infrastructure gap all over Asia, right? So you've got competing institutions trotting out these numbers. You actually examine this, you try to link this up with national development plans. The sums don't add up. Because if you look at India's national development plan for the next 5 years, it has a reasonable estimate of what the Indian government has the ability to invest in infrastructure. India's needs may well be 10 trillion or 30 trillion, but and I think that should be a very important consideration, that we don't pile up debt of countries, both to build better infrastructure as well as to achieve the objective of climate finance. Countries really have to be sustainable in the way they raise financing, be it for green, be it for infrastructure. We should not forget that lesson. So healthy dose of skepticism on these trillions of dollars that the gap may well be real, but how are you going to achieve it? Are you just going to accelerate economic growth and pile up on debt to achieve that objective? Answer, I think our collective interest would be no. The third point is, how do you link up green financing with what countries have committed to Paris? And I think if you look at the nationally defined contributions, 2 examples would be India and Indonesia. And they set out, I think the Indian NDC is an impressive piece of work. And it's got lots of ideas which are homegrown in nature, so India is not waiting around for external parties to help it achieve the objective of building a green economy. And even before the Paris Agreement, the single biggest public policy intervention in the developing world, I think in the last 10 years, happened in India with the introduction of LED bulbs, where the Indian government is willing to put a subsidy in place to really convert usage of conventional electric bulbs into LEDs, saving a huge amount, obviously, on energy, and actually contributing to climate mitigation. So one should also look at, I think there's a tendency when we talk about green finance to only look at it from the perspective of issuers. And I think if you look at it from a broader public policy perspective, I think there are lots of green solutions for which green financing can become available. I think LED bulbs is probably one example. The other one is solar. I think a decade ago, none of us would have expected the price of generating solar power to have fallen so precipitously as it has done over the last 10 years. So solar today is actually competitive in many countries compared with conventional power. And that will be an important driver for green finance. The third point, which you mentioned, there are a lot of country initiatives. And if you can divide up ASEAN and South Asia really into 2 buckets. So you've got Singapore, India, and Indonesia, Philippines, Malaysia, and Thailand. I think, who are perfectly capable of building their own national plans, obviously drawing on international support wherever possible, trying to figure out whether they want to issue green financing in local currency versus foreign currency. That's a very important consideration. We don't want too much of green issuance only in pounds or dollars. We want to be able to develop local capital markets by greater issuance in local currency. Then you've got countries with more limited capacity, Indochina, Myanmar, Bangladesh, Nepal, and Sri Lanka, who probably need more international support, both in the form of multilateral aid as well as private sector participation. And I think the perverse thing really is, if you look at private sector participation, it tends to go to the bigger countries. They naturally prefer to go to countries with scale, with a well-developed corporate sector. So you've got to think about how do you embed the right amount of guarantees. And this is where multilateral organizations, I think, can play a role in bringing together blended finance instruments in countries who want to go, who've made commitments to go green, but simply lack the capacity at this stage. So I think there's a little bit of everything that the international community can offer in terms of support. We can build on the examples of the large developing countries like India and Indonesia. Indeed, presents a very, very interesting example where it can simply prefer to go conventional for a long period of time, or it can look at its resources, geothermal being a huge untapped resource in Indonesia like it is in the Philippines. Or Indonesia can actually be very bold and say that it wants to give up on conventional power and go down the renewables route. Its NDC at the moment is a little bit ambiguous on that trade-off, and obviously it's a very difficult public policy trade-off that the government has made. But I said overall, ASEAN and South Asia are headed in the right direction. I think there are already some very good examples where these interventions have worked that we've got to look at. And obviously, speaking in the perspective of a large international bank in the region, we stand ready. We're actively and enthusiastically participating in green finance efforts from many of the issuers. But I think we worry a little about the smaller countries which need a little bit more hand-holding. Thank you.
You've mentioned a few aspects where there are shortcomings or where things are a bit slow. We need the multilaterals to pitch in. We need a dedicated investor base. We need countries who are committed. Where's the momentum going to come from over the next year? Who needs to make that push to get it all going?
The momentum has to be homegrown. It cannot be imposed from the outside. You really need countries who go through their own difficult political process in building support for climate policies. And it all starts at home. And I think if you've got, and I think India is a striking example, before Paris, they came up with their very ambitious renewables plan, and that really is the foundation for. And then I think the foreign participants and the local participants can go in and then draw up a financing plan. But ultimately, the spur has to come from the countries. And, there could be a lot of international advocacy. And I think for the smaller countries, they need a lot more capacity building in developing some of these plans.
Pratik, you come from a country where we've seen quite a bit of initiative, you work with a country. The Federation of Indian Chambers of Commerce and Industry in India have set up jointly with the Climate Bond Initiative this green financing initiative to promote and develop the green bond market, and you have worked on the London end of this. What has been your experience with investors here in the West to pitch into that initiative?
So today we're on a panel of skeptics. So I'll try and be slightly more positive, and I'll take my note from what Vasuki said about looking at things from a broader public policy perspective. I think India's story is one of political will and of opportunity as well. Partly that opportunity has been through chance and serendipity, and partly it has been genuinely homegrown. And I wanted to start with a brief quote from the Indian Prime Minister. Came here in November 2015, and he hired out Wembley Stadium. 60,000 people came, diaspora, came and saw him speak for an hour without notes. And it was freezing. With wind chill, it was less than 0 degrees. And one of the things that got the biggest cheer of the night was a quote from him where he said, "When we talk about bonds, we first think of James Bond. After that, we think of the freshness of the tea of Brook Bond. But now, let's not just think about James Bond and Brook Bond. Let's now think about masala bonds." And this got one of the loudest kind of cheers, and this was not just for a few seconds, this was for a good couple of minutes. And that's very much been the start of the kind of public policy story in terms of renewable energy financing in India. That at the very top level, there has been that buy-in from the Prime Minister, and that messaging and that signaling within the country has been very, very strong. Piyush Goyal, who was the Renewable Energy Minister until just a few days ago, has been to London a number of times, particularly in the last year, whenever there's been a new bond issuance, whether it's a green bond issuance or otherwise. And he's been on record a number of times to say that London, the City of London, London Stock Exchange are excellent long-term partners for financing India's renewable goals. And that message has come from the Indian government a number of times, and that's come up in the meetings that we've had as FICCI. Donald Trump name-checked India a number of times in his speech where he said the US was going to come out of the Paris Accords. That got a lot of coverage. I mean, Donald Trump gets a lot of coverage generally, but in India, that particular speech got a lot of coverage because that went against a lot of what the Indian public and what the government has been saying in terms of India's made a huge push towards renewables, and what the US government seems to be saying doesn't really ring true. Because, as Vasuki said, a lot of the ideas that we've had in India to promote the renewable sector have been homegrown. There's been a trio of ministers, not just the Prime Minister, but a trio of ministers in the Highways Department, Nitin Gadkari, in the Renewable Energies Department, Piyush Goyal, and also the Railways Department until a few days ago, Suresh Prabhu, who are all very senior BJP ministers, and they very much represent the cream of the crop, or some of the cream of the crop. And they've been working together very much with Prime Minister to try and really push infrastructure financing and green financing of various infrastructure assets. So there's a recognition that clean infrastructure is needed to build a resilient future GDP growth. And to add on to that, that's particularly important in the last 6 to 9 months in India, because as the number of bond issuances has gone up, green bond issuances in London and elsewhere, India's GDP growth has actually, since the last quarter of last year, it's fallen by about 2 percentage points, which is quite a spectacular fall. It's probably only in the short term, but many other governments in many other countries with such a sharp fall in GDP, priorities of the government would switch from things like renewable energy, which the common man on the street doesn't really understand, to other things like health, education, job creation. And the government's view on renewable energy and green financing has not really changed. And that's testament to the direction that India has gone in and will stay in, at least until probably May 2019, when we have the next elections, and then we'll see what happens after that. Vasuki mentioned LED bulbs. So this, I think, is one of the really big untapped opportunities where India has done something absolutely remarkable. The biggest project in the world ever of replacing halogen bulbs with LED bulbs. And this has gone pretty much unnoticed outside India. And the great thing is about exporting Indian homegrown excellence in this sector is that this scheme called Ujala, which means light or illumination, that's now set up a company in the UK and is operating, has made a couple of acquisitions here, and the idea is to bring those energy efficiency standards and the standardization that India has managed to achieve, whether it's replacing bulbs in railway stations or public sector bank buildings or government buildings or municipal buildings, and bringing that here. The first client has been the Indian High Commission building in London, which has seen energy savings in terms of their lighting bills of about 50 to 60%. And this is basically because if you go to John Lewis and buy a 9-watt LED bulb, which gives the same amount of light, let's say a 100-watt halogen bulb, that will cost about £5 in John Lewis, or £7 or £8 in Waitrose or elsewhere. India has managed to produce these at £1.20. Include the shipping cost, and it's £1.50 a bulb. And the Ujala scheme is essentially saying, we'll come into a building like Asia House, replace all the bulbs for free, we'll guarantee them for 5 years, and if 4.5 years later, one is faulty, we'll replace it for free. And in return, we'll keep a proportion of the energy savings. And this, I think, over the next 6 months or a year, this is going to be some of these kind of schemes that are coming out of India. That's going to be what's going to push India from the 7th most important country in the world in terms of bond raising to much, much higher.
So if anyone needs their bulbs changed, you know who to turn to. I want to open it up to the audience. Do you have any questions on ASEAN markets, on Indian markets? Can I just ask, go back to India again? India is fairly leveraged. So what role do you actually see really the Western capital markets play in financing Indian green bonds, but also across the wider region?
You're right, India is very leveraged, and in fact, the Indian government spends more on debt interest than it does on primary healthcare and education put together, and it has done for the last 40 years. So it's not a new thing. So I think that's the number one challenge that we have in India. Deploying credit in clean energy, if it happens through public sector banks, for example, then one big challenge public sector banks have is that there are specific lending requirements that each of the banks have. So in providing cheap credit to agriculture, to SMEs, for education loans, there are a list of priority sectors, and 40% of all lending that happens from public sector banks has to go into these priority sectors. One way that could change is if renewables became much higher priority in terms of being one of those priority lending sectors and increased in priority. But because of that restriction, we have to look abroad. And the bond issuances that have happened in London, whether it's Axis Bank or NTPC or Rural Electrification Board, they've all been at between 3.8 to 4%-ish, if I'm right. And I think when Indian corporates have come here, or PSUs, or public sector undertakings, have come here to raise, they found certainly London has been a kind of a very willing partner through City of London, India Advisory Board, or the Stock Exchange, or elsewhere. And I think that will carry on.
I think there's a general point about what Indian regulators are doing to dampen the issuance of masala bonds overseas. The new guidelines are worrying. I think there have been one or two issuers who misuse the provisions, and the government is really clamping down hard on the overall masala bond environment. So that's a trend to watch and worry about. And I think debt sustainability, as I highlighted earlier, is a very important consideration. I think there is a path, particularly for the smaller countries, if they're multilateral organizations or indeed bilateral donors who are willing to provide an element of guarantees. I think this blended finance is gaining momentum. It's not by any means, so you want outstanding green bonds, I think, are about 100 billion. I think you got issuance about 50 billion. The proportion of blended finance deals would be significantly smaller. And if you step that up, if you've got multilaterals willing to offer those first loss guarantees, I think that'll create an incentive for infrastructure being built without burdening the country with too much of debt.
Kiyoshi, what do you think is the one lesson maybe your ASEAN countries could learn from India?
Well, I think India is a very interesting case because, like ASEAN countries, you know, there are a lot of infrastructure financing financed through the banking system, which create a problem to the banking system. Now the government is pushing to shift the financing of the infrastructure project from banks to a capital market. So I think ASEAN country can learn a lot from the India's experience, because what happening in ASEAN countries is basically it's projects are financed by local banks, and there's a local banks have a capacity to finance these projects in many ASEAN countries. But the problem is whether that's a good thing to continue to do it, because which create basically asset liability mismatch problem in the banking sector. And some countries now realizing this risk and try to push to more capital market financing through the, try to mobilize long-term saving in the pension system or insurance sector to finance infrastructure projects. But the ASEAN country can really learn a lot from the lesson, learned in India from that the point of view, yes.
Questions?
So it's actually for Yoshisan. I mean, the facility that you run is trying to support ASEAN countries or deals in ASEAN countries, if I understand correctly. So do you find there's a lot of demand for green in that? I mean, it must be quite difficult anyway to be designing these kind of credit guarantees. Is there a lot of demand from projects or from clients for, like, particularly for green projects or for climate, or is it still mostly?
Well, there's a lot of, still the relative size is small in ASEAN for the green investment needs, but still the reasonable size of the investment needs and investment are taking place. But creation of the green bond is a problem, is issuers not interested to make it a green bond or call it green bond. Together with ADB, we did a geothermal power project to make it a green bond, but initially the issuer was not really interested to make it. Why that, we have to make it green and pay additional cost, there's no benefit for doing that. So that's really the huge hurdle. So one important thing is to create investor base for green bond in the local bond market. And to create investment base, you have to define what the green bond, and maybe there's some kind of incentive or something from the policymaker side to create, to make it that definite asset class which some investor wanted to invest. Otherwise, it's very difficult. Interesting example is we are now working on the pilot project of securitization of a rooftop solar panel in Singapore, which will be the first securitization of rooftop panel. And obviously, this is green power. But here, even issuer is not interested in call it green, because they think that, well, we don't want to pay for this additional cost to make it green. Why we should? So that's very difficult challenge to bring into the green bond, unless there's some kind of benefit the issuer can find out, or can find from being into green bond.